This video is going to be about weekly analysis for a few pairs and also when I would take a counter trend trade. I think it's something that it can be applicable to everyone. I think that going with trend, going with the 4 hour trend, going with the daily trend makes so much more sense in the general scheme of things. You'll find that every week. Even if Monday to Thursday price has been doing a pullback in comparison to what the actual trend is on the 4 hour or the daily, you'll find that usually even on the Friday where it does go back with the trend, it's a very big momentum impulse move that makes up for those 4 days of counter trend movement. It's very rare that you're going to have a whole week that there's no movement with the trend. If there's obviously a trend, it's different if, for example, euro yen etc. recently has just been kind of it is obviously in an uptrend and it broke out of here to the downside and then got back above, used that as support again, and then we've been pushing. And but if you look in the last 5 days, the last 5 days has been very sideways. Now this is on the daily chart. So what I'm just going to do is I'm just going to go through what I'm seeing for a few pairs, and then what I'll do is I'll go over the kind of lessons. So with Euro Aussie, I'm only short. That's the way I'm looking for. Obviously, we're at support just now, so I don't want to be selling into daily support. I want to see a break and close beyond, and then a retest. I want to see a solid push, and then looking to enter. Now, the only you've got these areas here on the 4 hour that would be the main kind of targets for the week, which would be down at well, not that far actually, to be honest, 1.56, which is like 12 pips from where we are just now. So obviously I would prefer a pullback for, say, Monday, even Tuesday, and then looking for that push down into the 1.560 level. And then obviously if we get through there, then we get through there. Now, a counter trend move could be possible whenever we get down into 1.56, 1.5595, these kind of areas. If price gets right into this area or even takes out the low of this candle, and you see some buyers coming into the market on the 1 hour chart, and then a decent pullback or 15-minute structure break to the upside, and then again a pullback that makes it worthwhile, that you can get protection from not like 4 hour lows, the current 4 hour that you're in, the previous 4 hour, and ideally the current day and the previous day. That is when I would take a counter trend trade, because it makes at least some kind of sense. Because if you're seeing the lower time frame structure change and the lower time frame bias change, then obviously if you're getting in low enough with a well protected stop loss, then it makes sense that it could be possible that you get a nice trade for at least a day or so. So that's Euro Aussie. Euro dollar, I see Euro and the dollar weak, so I could see that this actually goes sideways. I don't really have any particular preference as of right now what I would be preferring. I think that pound is going to be stronger than euro, so if I was looking for euro dollar, I would definitely prefer pound dollar long. So yeah, pound dollar, I think it can go higher now that it's broken out on the daily. As long as the momentum stays around, then we should keep on going higher, possibly even into 1.40, and then see how price reacts here. Well, there. If you look on the weekly chart, you can see that we've had a solid close beyond. Now, let's go back to, it's been quite a while since price has been here. Now, it is an area that is a potential, like a break and retest that hasn't been tested since price broke through it in 2018, but up into even, as I say, 1.40 could be good, and then even into 1.42, it's still possible. I mean, there's a lot of bullish momentum in the pound, And with the US dollar being so weak, then I would definitely say it's long or nothing for me on pound dollar personally. It just makes it easier for yourself as well if you have a solid bias and you're like, right, okay, well, I'm going to look for longs and that's my only real trade. It doesn't mean enter long above the highs of the day and just entering long, just, oh, it's making a new high the day, it's going to keep on going forever. Because the likelihood, as I've shown in other videos, is once it creates a new high of the day, then the likelihood is you're going to get some kind of pullback. So it's just about making sure that you're getting in at a buy low area on the 1 hour, on the 4 hour chart where applicable. If we go to Euro New Zealand now, Euro New Zealand is very similar to Euro Aussie. I feel that it can go short. The euro to me, I see it getting weaker from what the charts are saying. So we've got support here. This was the kind of 4 hour higher low. If we get a close beyond here, then we're definitely going short. I expect a reaction off of here. So again, this could be an area that makes sense for counter trend trading, just really into the lows. You see a 1 hour bullish candle, you can get your stop loss protected by the 4 hour and the daily lows and see what the previous 4 hour, close 4 hour is doing and where the lows of the previous day are. And you could be looking for a good long, at least into the possible head and shoulders area. Even if we don't get a structure break, it can still be a head and shoulders area. It could just do it could just do something like this, where it comes into the support and then goes, and then look for that kind of trade rather than actually getting the structure break. It can give that kind of movement. So that's Euro New Zealand and dollar CAD. I'm short bias here. Obviously, we have an origin of a strong bullish movement to the upside. So the next time that price comes into this area, I expect a reaction. How long will the reaction be for? How big will the reaction be? To me, that's impossible to tell. It's just you've got to use, right, okay, well, if I'm coming into this area and and I see a valid reason for a reaction, well, where are the areas to the upside that make sense for buyers to get to without actually breaking anything significant that would then change my bias to long? Well, we have this area that was resistance, we broke up. So then again, it could be this kind of breakout, break back in. We have this area there as well, which was resistance. Again, very briefly closed beyond, but not really. We didn't close beyond it in here, and then this bullish candle didn't close beyond the wick. So to me, the structure still held, and then actually the structure is part of this wick anyway. So you have to, for me, I have to see a close beyond this wick for this structure resistance to be broken. So it would make sense to look for something in here and short, or in this area and short. That would be the sensible option for dollar CAD, or waiting for a break and retest, a break of this area, retest as resistance, and then looking for that short. That would be my four main bias for my 4 main areas for my sell bias on dollar CAD coming into this week. Because at the end of the day, this is a 4 hour chart, so it's only 30 candles or so a week. So it's not as if it's going to create loads and loads of price action. It still is only going to be 1 or 2 main swings in the week. That is the main swings that you want to be catching. So it's just about, well, where can those swings start from? Where can those impulses start from? Looking for buys in kind of a counter trend way. As I say, you could look to see, right, well, if we come into here, 2 till 6 a.m. is bearish. We come into this area, so let's just say, for example, we closed a small body with a decent wick to the downside. and we had something like this that did close bearish, yes, but we saw that the sellers were coming into the market. Well, look and see, right, okay, well, where is the 1 hour support? Where's the 15-minute support on the lower time frames? Do you really feel that actually it could be a decent impulse to the upside that's counter trend? Well, you're going to get that more likely whenever it's coming from a 4 hour and daily area combined. That's where the best counter trend moves come. Now, obviously, it makes sense that you can just wait for this reaction to occur and then look for the shorts, and then obviously change your bias if this area is taken out and just not get involved in the counter trend. That's fine as well. It's just for the kind of people that I work with that are just wanting to be aware of the charts as a whole, like be aware of directions, be aware of biases, and just understanding the movement of the market. Having mechanical strategies, being the kind of having the kind of thought process, right? Okay, well, I'm only going to trade with the trend. That is totally fine. Now, I am 80% of the time like that. There's a lot less trades that I'm going to be taking counter trend to my 4 hour daily bias. But there is times that can make sense that I would risk less. I wouldn't risk more than 0.75, 0.5% risk. But why I'm entering them is I feel that they could still go a decent risk to reward if price starts moving through the lower time frame areas to then actually make a trend change that you're getting in from an area that actually turns out to be the origin of a 4 hour or even a daily push, that then you're able to take the trade for a good day or so. That would be the only kind of counter trends that I would say you should look at. Would I take counter trends if it's just in a 1 hour area? No, it has to be 4 hour and daily area, and to do with the previous 4 hour and daily closes, and looking for that extra stop loss protection that lines up with structure and the immediate momentum. Then you look at the lower time frame structure break, a 1 hour solid candle in the direction that counter trend can happen, a lower time frame structure break from a 4 hour daily area in line with the previous 4 hour close and daily close to get that solid stop loss protection. I would then say, right, okay, how are those currencies that you feel as if a pair is going to go counter trend? How are those currencies doing across the board? Go to the strength and weakness, see, right, well, I'm looking at dollar CAD just as an example. I think that it's going to go it's going to go against the trend long. Is the dollar strong today? Is the CAD weak against most other pairs? Does it make sense that actually, or like CAD Yen, for example, which is to do with correlation, if CAD Yen looks as though it's looking to go short to the downside, then it would make sense that dollar CAD should go long. And also pound dollar, if it's looking to go to the downside, then that would show dollar strength. And then again, if the CAD is weak against other pairs, then it would other currencies, then it would make sense, right? Okay, well, if it's weak against other currencies and the dollar is strong against other currencies, then the likelihood is there's going to be a decent move that you can catch that then just allows you to get involved in the market more often, and it shouldn't affect your strike rate or risk to reward because you're getting into counter trend trades that actually make sense on the higher time frames, and it makes it worthwhile at the end of the day, rather than just any old counter trend that you're just looking for short term trades. It just makes sense to let the short term trade happen, and then either price starts going sideways and you just miss your opportunity and that pair just doesn't do a trending move for the day in your direction, or you wait for the short term move and then price to sort itself out and then start going in your favour, and it should be a much smoother ride and have the potential to last a lot longer as well.